Price action is a reflection of market psychology and investor confidence. It's not necessarily indicative of the performance or profitability of a company, though. We found that out the hard way with Tesla, which has seen massive stock price growth over the last couple of years despite lackluster profits. A company that has significantly outperformed Tesla in stock price growth over the past year is Exxon Mobil. The difference is that Exxon has everything you could want in a strong company from a fundamental standpoint. When I look for assets to buy, I seek out ideas that I'm willing to bet my livelihood that they will be successful in the future. At first, when I began investing, I would always hear about the next big thing from my friends, or we would hear speculation that a certain biopharmaceutical stock might get a new patent and it could send the price to the moon. Sometimes we would hit big, and other times we would suffer crushing defeat. For some, this is their bread and butter, and I'm not raining on your parade. If this is the game you want to play and you're good at it, then go for it. But for me, I found success with a different strategy. I personally don't have time to keep up with volatile fundamentals and volatile price action. I would rather be looking at the charts. I don't like investing in what I call leap of faith ideas, like when a company has a certain drug going through trials and the stock price is going to be dependent on the success of those trials. This is what used to appeal to me, but now I see it as more of a gamble than an investment at this point. ExxonMobil appeals to me from a fundamental standpoint because out of the entire energy sector, especially the fossil fuel sector, if I went into a coma and woke up 20 years from now, I would be shocked if they weren't still a top dog. I can't really say that about most other companies in the same industry. I find the oil industry as a whole very attractive in the short to medium term, as it took a pretty steep dive to the point of being undervalued in my estimation as of late. Some people think the future of energy is green energy, but we have seen time and time again that green energy, one, isn't really all that green, two, isn't as scalable as fossil fuels, and three, isn't as reliable as fossil fuels. For these reasons, I don't believe fossil fuels will be removed from the status quo, and those claiming electric cars are the future and that they will make oil irrelevant are simply misguided, at least in my opinion. I think some electric cars are really cool though. I had a chance to get inside a Tesla and it straight up felt like a scene from Rick and Morty, like I was in a spaceship. But I really see this as simply a niche product, and it's a big leap of faith to assume it will take over the industry. Exxon has taken a pretty good approach when it comes to renewable energy, and that approach is not to dive into the water, but to just dip their feet in. They haven't heavily invested in renewable energy technologies, but they have been working on reducing greenhouse gas emissions, advancing biofuels, and carbon capture and storage. Instead of going with blind idealism, they are developing and working with more known commodities and taking calculated steps to stay at the top in the future. Like I said, Exxon simply isn't going anywhere. It's here to stay. So with that said, let's see what the price action has looked like over the past few years. On the screen is a rough synopsis of what the price has done lately, and I'll break it down for you. From left to right, you'll see a long trend of upward moving price action followed by a 39% correction. From there, you had almost 6 years of an uptrend reaching a price increase of 240%. But what goes up must come down, and what followed that new all-time high was a 42% correction. It took about 4 years to recover from that correction to a new all-time high, which stands as the current all-time high. In that time, the price rose about 88% from the bottom of that correction to the top, and that's when the momentum switched to a long-term bearish trend. Over the span of a year, the price corrected 37% and bounced but didn't reach a new high. Instead, Exxon maintained a downward sloping support resistance channel, as you can see in purple on the screen, for almost 4 years before capitulating. Many bullish trends reverse with a blow-off top, an unsustainable bubble which results in a relatively meteoric rise in price followed by a crash. The opposite is true with bearish trends, as they reverse with a capitulation. We had years of consistent bearish movement followed by a 58% crash, which was a 71% correction from the all-time high. One very important thing to note is that this capitulation held a historic critical support level. The red shaded area around the $30 price range is what we're looking at here. The blue circles denote significant periods of time where this range has held strong support over the years. So it's really important that we held that even in this capitulation, which denotes that that was the bottom of this bear cycle. So where does this leave us now? I want to show you another chart. Each candle you were just looking at represents 1 month of data, but in the chart I'm about to show you, each candle will represent 1 day. This is very useful when looking at what has happened and what will happen in the short to medium term. There's a lot to unpack here, but not as much as that last chart, so let's get down to business. This is the daily chart. Right off the bat, you'll notice we have some green areas of resistance for Exxon Mobil. But before we get to that, let's look at the 50 and 200-day moving averages. The light blue line is the 50-day and the dark blue line is the 200-day. When the 50 crosses above the 200, like it did in the yellow-orange circle, this is called a golden cross. This is a very big deal. This denotes major, credible, and lasting bullish momentum more times than not, and what usually follows is a long period of uptrending price action. These moving averages can act as support or resistance as well, and as you can see from the chart, the 50 is acting as a support line for the price right now. This means it will be hard to get and stay below this point, but if we do, it might be hard to get back above it in the short term. Taking a look at where XOM is headed, we are clearly headed up here, but we already got rejected in that first area of resistance. What we know is that it will be difficult to get over that hump, but when we do, this will become support. Keep in mind, old support becomes new resistance, and old resistance becomes new support. If you take anything from this video, even if you disagree with me about ExxonMobil, remember that. Old support becomes new resistance, and old resistance becomes new support. The more critical area of resistance is the one above that, which, as you can see, was respected as strong support for a long time, even dating back before the data visible in this chart. A break of that resistance will be crucial because it is also the drop-off point for the capitulation that occurred. What it will eventually become is the liftoff point for the continued bullish uptrend I am expecting to see over the short, medium, and long term. I thought I would give some price predictions for ExxonMobil, but keep in mind, none of this is financial advice. I think very conservatively, so I am expecting it to be higher than this, but just being conservative here, we will see a $65 to $70 Exxon in 2021. I wouldn't be shocked to see a new all-time high over the next few years, maybe 2022 or 2023. This isn't cryptocurrency, don't expect to 10x your investment overnight with Exxon, but I see this as a relatively low risk and high reward opportunity. But let's not just look at this from my bullish perspective. While I am certainly a bull in the long term for Exxon, there is the definite possibility of bearish price action in the short term, even though it doesn't look that way. Every investment is a calculated risk based on probability and not certainty. So you need a plan in case you're wrong. So what if the bears take over and we don't retest this resistance? Or maybe we do, but we get rejected so hard that the price takes a while to recover. There are two major bearish scenarios to keep in mind. The first scenario would be about a 21% drop from the current price to retest the 200-day moving average. The second scenario would be a little over a 40% drop, which we saw happens from time to time. In this second scenario, we would retest that critical support between $29 and $33. My strategy for either of those two bearish scenarios is to dollar cost average, to accumulate more of the stock because its medium to long-term prospects are bright. If we did see a correction like that, I would look at it like the stock is on sale and I'm getting a discount. But more realistically, I'm looking at ExxonMobil as a stock with high growth potential in the short to medium term and as a very safe long-term investment. But what do you guys think about this stock? If you liked this video, make it official with a thumbs up and be sure to comment and subscribe for more videos like this and about a variety of topics in the future.